So today we're going to try and talk about, is margin trading good or bad? It's a video which I'm surprised I've not seen any of the big YouTube channels actually talk about that go into stock market. It is a topic that really needs going into depth because a lot of beginners could end up into the situation of margin trading. And potentially a few experienced stock market traders might be looking at going into margin trading. So today we're going to talk about, is it a good thing, is it a bad thing, the pros and cons, and overall I'll give you my opinion on it. So margin trading is pretty much getting lent money that you actually don't own to buy shares. Now this could actually be used with real money, or what we see quite often is margin trading can be used with something that we call CFDs, contract for difference, which is where you actually don't own the shares. That is easy. It's easy for like brokers to do margin trading with CFDs because they actually don't lose money. But at the same time, if you do make money, they lose a lot more money. But because of the risks, a lot more people do tend to lose money in margin trading because of how quickly the losses can be. If you go onto Google or the App Store and you look at like CFD apps, you'll see a lot of them saying, oh, money takers and all this because they just lost the money that quick. So that's what margin trading is. Why is margin trading so good? Well, basically, let's say we have, for example, $100, £100. If we had like a 1 to 5 leverage, basically that would give you the ability to go and buy £500 worth of shares, or $500 worth of shares. So that would allow you to get a bigger position in a company. If we had say for example we'll say Google was $100. I wish it was, but it's not. So let's say it's just $100. If I use just real money, I could only buy 1 share. With leverage, I could go buy 5 shares. Now, if that share was to go up, I would make 5 times the money because I have 5 more positions than 1. So if it went up $10, I would make $50 overall with 5 if I was using margin trading. If I was just using real money, I would have just got $10 because I've only got the 1 share. So obviously that means you have the bigger profits from having a bigger position, which is really good. You get to make more money with actually having to invest that much money. That kind of leads me on to my next point. You actually can get into the stock market with less money. You could be trading potentially like you have 8,000 in the stock market when only you have like 2,000 in the stock market. So you're actually getting such a bigger position, more profit. You're extending your portfolio so much quicker because of that. So again, obviously this sounds really good. So why do you hear a lot of YouTubers that do stock market videos kind of like say, oh, margin trading's bad, but then that's it. We don't really hear too much about it. So this is the reason why it's bad. Obviously with bigger positions we get bigger profits, but at the same time that means you get bigger losses. And a lot of margin trading will have kind of like a call or a maintenance level, where if your account drops below that, your positions get sold and you lose all your money basically. And obviously losing money a lot quicker means you hit that margin level a lot quicker and maintenance level quicker. And from kind of experience, the kind of level we're talking at is that your stock goes down 6%. That is probably where you would get it. So obviously you can tell that is quite a close, it's not a low number. So you can get that very soon. Let's take for example, there was a dip just before Christmas. I would say a lot of stocks went down 10% in that dip. So if you opened an account, invested $2,000, £2,000 into it, then your account probably have gone into maintenance level, margin level, and you'd have got called and you'd lost all your money. So you could just go like that and lose it. So you've got to be very careful with margin. It is probably best to go and invest like 1,000, but then you would go half and have 500 cash and just leave it there in case it goes, if your account dips, and that'll look after you and cover you, so you have about 12% leeway there. But you could even still get called on that, so like I said, it's a very risky one when it comes to losses. Like I said before, with the kind of like margin trading, there's normally CFDs, so you actually don't own the shares. So if the company you're using to buy these shares, you can't transfer them somewhere else. If that company goes bust, then you lose your shares basically. So that's also another thing that you've got to be careful of, and when you're using margin trading, with it being CFDs, that could happen as well. Overall, what's my kind of opinion on margin trading? Personally, I use margin trading quite a bit. Not all the time, but quite a bit. The reason why is I'm kind of careful about it. I see a lot of people that just rush and buy more and more shares. If you're picking winning stocks that you know are going to go up, then you're never going to have to worry about losing your money. If you buy the right amount of shares and you look after yourself, you're okay. It's all about buying at the right time and making sure that you're only getting in slightly and building up your positions slowly. If you go all in at once, you can lose it all. That is the most risky time when you are buying the shares for the first time, because if it goes down loads when you buy it, that could kill you off pretty quick. So you got to be careful about how you do it. I will make a video about how to go in the right time and how I do it, if people want to know. So my overall opinion about margin trading, it is definitely not something if you're brand new into stocks, because it's hard enough trying to choose a winning stock when you're starting, never mind having to lose your money very quickly. So I would not recommend it to anyone that has just begun in the stock market. I would probably say that you probably want at least 2 years experience trading under your belt with normal money before you go into margin trading, so you can understand the movements of stocks and more out of this bull market that we're in, so you can kind of see the volatility that can happen with being in margin trading. That is something that I would recommend. But overall, it is a good thing if you constantly get good stocks that go up, because you are set to make money normally, so why not multiply that by 5 using margin? Very simple thing, but like I say, it is not something for beginners. Practice with normal stocks first before margin trading, and then I would take it from there really. So guys, give the video a like. I'll see you on the next video.